Yo, guys, what is up? Apologies for starting a little late today. We were having a couple technical difficulties, but we're here, we're live, and we're ready to crank the charts. Shout out to all those in the chat right now. The chat is popping off. I see you, Freely. I see you, John. I see you, Trip Davidson. I see you guys in the chat. I saw you guys shared some charts. Sir Sigma, I see you there. So I will try to rip through a couple of those charts at the end. But without further ado, 20 charts in 20 minutes. Let's get into it. Gene, if you want to go ahead and get that timer started, we will start with chart number 1. All right. So here we're looking at equal weight S&P 100. All right. I like looking at this. These stocks make up 75% of the weight of the S&P 500. And I think this week there was a little bit of fear in the markets. You saw the VIX kind of spike early in the week. And sometimes you just got to take a deep breath and understand that sometimes it's just tech-driven information that's occurring. But overall, equal weight S&P 100 looks just fine. The average stock, the average mega cap stock looks just fine. I don't see any issues here. I will say that I thought these base breakouts would maybe continue to the upside. Seems like they're taking a little bit longer. That'll kind of be a theme throughout the charts, but that's just giving you a chance to kind of add exposure as they're still above support. So you're getting back to these well-defined risk levels. And so I think we have some pretty good trade setups that are occurring here, and S&P 100 is one of them. Same thing, S&P 500. We'll sit here and look at this for a second. S&P 500 equal weight looks great, right? We just have this pullback to support occurring. Nothing crazy. You can see RSI is doing just fine, staying above 50, chopping sideways, which is okay, right? I know today was kind of a witching of options, and currently in the market, you kind of have positioning in options kind of skewed to the downside and to the upside. People are buying protection, but they're also already kind of placing bets on the Santa Claus rally. So it takes some patience here, but that's why you got to kind of zoom out and look at the primary trend is up, and we're just kind of consolidating here in the short term when the index level equal weight charts. We'll get into some charts here in a few minutes that I think are great setups on the individual level. This chart here, S&P 100, right? Percent bullish index on the bottom panel, which is just a breath, right? You guys can go back and watch a video I did a couple weeks ago on breath. And so bullish percent index, it's failing to break out. That's one thing I haven't liked that I've seen so far this year is that breath kind of is getting started and then not following through to a large degree the way I would like it to, but the market doesn't care what I like per se. We're getting back above the 50-day, and this is really just a consolidation. And I think oftentimes you can look at a consolidation and think it's going to be a top, think it's going to break down. But when we're above the 50-day and the 50 days above the 200-day, those topping patterns tend to fail. And what I want to highlight on this bottom panel here is you can kind of see we're at the bottom of the range where we tend to see reversion back to the upside. So I wouldn't be making bets to the downside just yet here. I think this actually might just be like a cup and handle type pattern forming overall. Next chart, mags, right? They make up 33% of the S&P 500. And it's right, the Amazon, Tesla, Nvidia, Microsoft, Google, Apple, Metas of the world. And so how they go is how the market ends up going, right? From a market cap weighted perspective. So we have just a messy-ish consolidation, right? We have higher low potential, lower high potential, kind of building this channel here, but we're above major key support and we're in a long-term uptrend. And so that's what you want to focus on is that primary trend we don't want to fight right now. It's still up. And so that's my focus here is this is just kind of a consolidation sideways. And we'll kind of get here into some of these individual charts within the S&P 500, within the MAX group. Look at Apple, right? Just a falling wedge. We break out of this wedge. We have upside resolution here above 275. I really like this setup in Apple. I think it's something that I might be looking to add some exposure to. I also like the defensive consumer staple nature of they make phones, right? And they tend to do well if tech as a whole is kind of chopping a little bit sideways or things like that. So I really like the looks of Apple here. I think it's a solid chart in the market, especially if you're looking at maybe uncorrelated tech to a degree. Apple doesn't tend to just correlate with overall software, semiconductors. It's kind of that hardware play that looks good overall. Tesla, another Mag 7 name that looks great. Look at this weekly chart. Alfonso, a friend of mine, posted a chart. The monthly chart looks very similar here. You have this huge base that's breaking out in something like Tesla. Also understand that the time frame for which I'm looking at this chart is a longer term time frame. So it might take time for this to break out. If you zoom in, it's not as clean. But if you're a longer term base breakout type of person, I think Tesla is someplace you guys want to look overall, right? So I think it's just a good looking chart. What's up, okay? Adam Computer. What's up, Lazy Beats? Hope you guys are doing well. NVIDIA, next chart I want to talk through. Same thing. You kind of just have these like falling wedges where you have long-term support. And so I like the looks of these. I think these might be some tradable setups where it might not get us to all-time highs, but you kind of have these tactical setups in Apple, in Tesla, not as much tactical, but in NVIDIA, where if these kind of resolve to the upside, we could kind of see a move that could take place under the surface while people are kind of talking about this rotation out of tech. Wrote a post on that earlier this week. I think it's probably overhyped, the rotation out of these mega cap names in tech as a whole. Let's get into some of these sectors. So communication services broke out of this down channel, right? Think of names. Google's a huge name in this, right? Broke out of this down channel and is now just consolidating sideways. These consolidations tend to go in the direction of the underlying trend, which you can see here. I just have the 200-day on the chart is up. So look for these consolidations to resolve in one direction or the other. Unfortunately, I can't predict the future. But if this resolves to the upside, I think that's where you bet on this breakout. And these consolidations are taking a little bit longer than I initially thought, but I still think you can kind of go to the upside with these types of names. I think this is something that looks solid overall. Now let's get into some uglier areas of the market, right? Look at something like Bitcoin. Right, not all bounces are created equal. Not all moves have been created equal. And I've been pretty, I guess, loud about the fact that I didn't like the way Bitcoin was setting up. I actually wrote a post, I think the day before Halloween, on kind of using Bitcoin and maybe even software as a hedge against some of the tech exposure that I had. It's worked pretty well. But you see here, this Bitcoin chart, I don't see a reason to be in this unless you're a bottom picker and you have really well-defined risk. It just, to me, this isn't like a favorable high risk, high reward trade at the moment. I think you still just got to wait for this to kind of get above some highs that it's formed, and then maybe we see that follow through to the upside. Software, on the other hand, is looking a lot better than Bitcoin. They were kind of correlated for a long period of time, but I like the way software is setting up. I really do. You kind of have this base that failed to break out, and then it's kind of forming another base here. I don't get caught up in the chart patterns, right? I'm not that guy. I have those books behind me about chart patterns, but chart patterns was just a language, right? It's just a way to communicate. Like today in society, there's words we can't say because they mean a certain thing towards certain people. Patterns, the same thing, right? The patterns just have names so everyone can kind of identify it as a whole. But this pattern here, this base kind of breaking out. If this can break out, I think it's a great trade. I actually think against 105, against these levels here in something like software, you could see a resolution to an upside, which would be great for the market because software makes up, it's one of the largest sectors in the market, software and semis as a whole. Semiconductors. Speaking of the devil, the thing I wanted to highlight about semiconductors is not to get too consumed by topping patterns when the underlying trend is up. It's very easy to get consumed by topping patterns when the underlying trend is up, but oftentimes they fail. Semiconductors earlier this year in July and August, September, this pattern here, people were calling it a top. We had momentum, RSI divergence, bearish RSI divergence. You can look that up afterwards if you want to, a bearish RSI divergence. And guess what? It wasn't a top. It led to a huge follow through to the upside. You're seeing similar now where you have this double top looking pattern and it sounds spooky and you can see all the downside it could potentially create, but it could just be a base on base that's going to resolve to the upside. So something like 350 In semis, if you zoom in a little bit more, I zoomed out on this chart, but something like we stay above 350 in semis, there's no reason to over pontificate about this being a top. There's a little more volatility in the market right now. So just take a deep breath and just zoom out on some of the charts because you don't want to get shaken out in these type of environments. You just kind of want to take a step back and not get overconsumed by some of this noise that exists when you kind of have a couple down days. And the down days were ugly, but we can make a higher low here and rip to the upside. So just keep that in mind when it comes to some of these topping patterns that look scary. So let's kind of get into the area of the market that I really like. It's actually kind of leaning a little bit away from tech. We're talking financials. Been talking about this a while, been talking about it on Twitter. A lot of the financial charts look great here. I like the way these are holding, these breakouts, holding above support, right? If you zoomed in here, you would see an even smaller version of kind of just a rising, right, falling wedge back down to support here. So I love the looks of financials. I like the way this looks heading into 2026. The names within financials, I think, look good. Specifically, you can look at insurance names. You can even look at the banks. I think both those areas of the markets look solid. A couple charts I'll talk about specifically in financials. Once again, this is not investment advice. It's just some charts that I like. American Express, huge base on base breakout, another base. And then you see it's kind of pulling back here to this 375 level. You find support here. You could see upside resolution. But as you guys know by now, I like the risk reward scenario. You have really well defined risk if you swing the bet here. If you're wrong, you get out, 1% or 2%, or maybe you use this last week's low as your stop. You're risking 2 or 3% to kind of get that move maybe up towards 400. American Express, great company overall in terms of how you think about it, in terms of, right, it tends to serve the upper middle class or the middle class that's, is paying their bills on time, can afford a $600 annual fee, those types of things. Bank of America, right? I made fun of Sam Gatlin, so you guys can go troll Sam Gatlin, but he was talking about Canadian banks. I'm like, this is America, baby. Why are we talking about Canadian banks? Shut up about those Canadian banks, right? This is America. Let's look at Bank of America. Just so happens Bank of America looks great. I love the looks here. Bank of America, base breakout, uptrend, another base, kind of trying to resolve higher. RSI above 50. You can kind of see it's just chopping sideways in this market. Great risk reward in something like Bank of America. There's plenty of other charts within financials. I'm going through 20 today. This is just one of them. Next area of the market, this one is annoying, right? This happens. I wasn't going to hide from this. I thought the breakout in industrials was going to follow through this week. And that's why we zoom out, because we just don't know. And it's why we manage risk, because we just don't know the future, right? We're placing bets with uncertainty. And that's why you manage risk. And that's why technicals is so great, because it helps you define risk. So we're just back in the range in industrials. But what I like here is that you have this RSI holding above 50. And so this pullback that's coming, you can see these other pullbacks, RSI did not necessarily hold above 50, but we're holding above 50 here. So we got to 60, holding above 50. So if we can get this next rung higher in industrials, I'll be a buyer again. I'm not normally a mean reversion trader. So like mean reversion's been crushing it in this market in a lot of names. You've seen these choppy sideways consolidations. I tend to trade more breakouts. So I'm looking for this breakout in industrials. And some of the areas I think can lead are aerospace and defense. ITA is the ETF. I drew it up here quickly, but you can kind of see downtrend, base breakout above 210 overall. Exactly. Freely. When XLI breaks out, look out. Exactly. Lazy Beats, what's up? Larry, talk about hop off any YouTube video once I realize you live. Run it. Dang. Well, you're back now. So Lazy Beats, welcome back. Aerospace and defense, nice base breakout here. Run into the upside. I like names within aerospace. Raytheon is a name that looks ready to break out. There's other names in there, Lockheed Martin, General Dynamics. Raytheon is one in particular, kind of has this base breakout. I also say in general, there's a lot of charts that are kind of sitting right below those breakout levels. So something you can do is, talked about it last week a little bit, run a scan, see how far something is away from maybe a 3-month, 6-month high, and just set alerts for those stocks as they kind of start to break out. We didn't see as many breakouts this week. New highs didn't expand this week, but these consolidations might lead to new highs expanding. You kind of see that expansion, consolidation, but the length of those consolidations, that's what we don't know. We don't know how long they're going to take to break out. Let's get into consumer discretionary. This is a beautiful looking chart and actually holding above support. Consumer discretionary base on base, cup and handle, people refer to it as. But we're kind of breaking out here above 120 and something like consumer discretionary. And you can look within there, kind of see the individual areas that look good. Something like Tesla makes up a huge percentage of this, and that's kind of resolving to the upside. Whereas the other side of the coin is Amazon is kind of sitting right below overhead supply. So I think overall, consumer discretionary kind of sticking this is a big deal if it can do that, especially into the new year, because this could be an area that's kind of chopped sideways for a year and could give the market legs. So that's when people are talking about bubbles and froth, it's like some areas are just now breaking out. So I don't really understand that narrative. You kind of saw it with that equal weight 100 chart. Some areas of the market are just starting to break out. You just got to know where to look. Financials just starting to break out. XLI just starting to break out. Lazy Beach, you're right. Aerospace looks ready to moon. I agree. And then I want to talk about healthcare. I think I talk a lot about stuff that's leading the market, and you've seen rotation into healthcare. And this right now isn't the setup I love. I loved it last week. We kind of talked about it last week, but I still think names within healthcare look good overall. You can look at something like biotech. I think biotech might be a buy here. I think right here is something I would be eyeing to buy in biotech. Is you have this down channel that looks ready to resolve to the upside. You have leadership that's existed, and you have RSI staying in this bullish regime. And so I think that's something I want to continue to see is RSI staying in this bullish regime, leadership resuming in something like biotechs will kind of give that consumer discretionary, that risk on bet legs in the market, which is something, right, is bullish overall for the market. Which insurance stocks do you like best? That's a good question. Let me get back to you on that. I actually haven't been eyeing those as much. I've kind of been diving into the banks a little bit. So I can't remember off the top of my head, but Chubb. I believe Chubb is one of them. CB is one of the names I like. Pharmaceuticals, right, within healthcare, it's been rocketing higher, but you can go down the list, pull up this ETF, look at the components. You guys could do that work this weekend. But pharmaceuticals is an area of the market that I think continues to kind of lead here, continues to look good. I think you can see here on the bottom panel on the relative basis that the relative trend versus the average stock in S&P 500 can give you a lot of insight to the market. So that's something else I added on this chart. RSI staying above 50, strong leadership out of certain areas of pharmaceuticals. So as you guys kind of see, I have this top-down approach where start with the overall market, then maybe the sector, then the sub-industry groups, then the individual names. And you can kind of follow that flow. That's kind of what I'm highlighting this week. So another area of the market I talked about, if you zoom out and kind of use the fractal nature of these breakout, pullback breakouts, is ARCQ. So I don't think you see alternative tech and robots kind of having an up week in the market, right? If things are really going to start turning sour for the market. I think this rally isn't something you would see. And so seeing this is a positive sign overall for the markets. I think this RSI 50 on the weekly chart is important, and then you can see it on the daily charts. I showed a lot of daily charts, but you can kind of see it starts with that weekly, and then you zoom in, and then you can have that more tactical trade option in something like ARCQ. I think Rocket Labs is a big mover here. I think it has a huge position in Tesla and Palantir and Kratos. So those individual names as a whole, you can kind of take a look at in something like ARCQ or ARCW or ARCF. Those kind of just give you that like risk on financials, risk on web tech companies, things like that. Lemonade. This was actually my trade of the year for one of my friend's blogs. He asked me about one of the stocks I like over the next year, and Lemonade I can't talk enough about. This is one of my favorite trade setups, is this IPO VWAP base breakout. So you have the IPO VWAP, right? Then you can kind of see resistance, right? That resistance flipped into support, got in at about 49. Now we're at 82. We've almost doubled our money. And I think we still have room to the upside. Companies surviving that huge interest rate hike and kind of recircling back when rates are still high tells me these companies are going to survive and continue to grow, but they also learned how to survive in a market that required them to probably lose employees, refinance debt. Consumer was kind of in the dumps. You've had a lot of cycles in this short period of time for this business to grow. And the reason I say that is this is what got me involved in Palantir, this IPO AVWAP breakout, right? Resistance, 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 turned into support, breakout, off to the races. Palantir, once again, one of those IPO names. And so I think Lemonade can do something similar. Is it going to be the same? No, it's not the same business. It doesn't have the same total addressable market from a fundamental perspective. But this chart pattern, you can kind of see that follow through. And then you just set a trailing stop and let it be. Hood, Robinhood, same exact thing. IPO AVWAP breakout, right? Turned into support, had that breakout here, and then off to the races, right? You get in around $25 and now it's at 120. Will it do the exact same thing? No. But that's not for me to predict the future. It's for me to understand those chart patterns. So I like these three names as a whole together. That Lemonade setup is what also got me involved in Palantir, which honestly is just consolidating sideways here. And then Robinhood, similar kind of setup. So let's get into a couple charts that the chat requested. Trip with a good eye looking at BTU Peabody. This is a beautiful chart. Beautiful base. I didn't draw it on here, but you have this huge base breakout and then kind of consolidating again. BTU above 30 all day. All day, I love something like this. This might actually be a position I may look getting interested in. But shout out to Trip for this one. Great looking name overall. And then someone mentioned DigitalOcean, DocN Holdings, had a larger short interest. Above 50, something like DocN, I think you get above 50. You could see this really this move kind of set in. I didn't have time to draw that IPL AVWAP, but I think overall this looks great. So with that, guys, I have ERO. Last one that was from the chat. Who sent me ERO? Sir Sigma, ERO. Beautiful base breakout in copper. So look at the chat sharing beautiful charts today. So with that, guys, those are my 20 plus charts in 20 minutes. I hope you enjoyed the video. Sorry for starting late. Our apologies. We were having some technical difficulties. If you guys could just give me a Christmas gift of a like and a comment a chart, and I'll actually take, next week will probably be off, but the following week, I'll look at every chart that you guys comment. So comment a bunch of tickers. If it's 50, I'll run through them. If it's 100, I'll run through them. That's my promise to you guys. So appreciate the love. Hope you guys have a great Christmas and happy holidays. Peace.